Hello, in this video we are going to analyze the biotech stocks with returns of over 300% that happened this week. We'll see how it's possible for these company shares to come back to life, what they do when they are on the verge of collapse, and what to expect from the promising scientific data they've presented. Stay with me, we are starting this taxi. Welcome to Taxi Biotech, a show to keep up with the latest news and updates from the world of biotechnology and to learn about its impact on the stock market. The stock data I present here is just a reflection of how companies or their clinical trials are progressing and does not constitute any investment recommendations. This is purely for entertainment. Let's go with the weekly review of the top biotech stocks and the lessons we can take from them. Today I analyze Bor Biopharma, Nektar, Eyenovia and Cidara. Let's start with Bor Biopharma. I love this example because it's so unexpected. As we say here, biotech surprise every day. Bor was dead, completely dead. They had laid off 90% of their staff because their research wasn't going well. Naturally, the stock tanked. They didn't even have a pipeline on their website. So what happened? They reached an agreement here with Remagen, a Chinese company, to buy the commercialization rights for a molecule that's already approved in China for autoimmune conditions like lupus, arthritis, and myasthenia. Now, Bor's plan is to finish the clinical trial in the US and Europe and sell the drug outside China, paying royalties to the Chinese company. The thing is, they are buying it for 125 million in cash, but Bor only has 64 million in cash, so they have to do a correct stock offering. What's strange about this stock offering is that they did it with institutional investors at just $0.25 per share, when their shares are trading at around $1 now. It's not a small stock offering. They are offering 700 millions of shares when they are only have around 100 million shares currently outstanding. Some users on X are warning that something might be going on here. And here's an extra detail. The stock price of the Chinese company that owns the drug dropped 20% after this sale, which shows that investors expected them to sell this molecule worldwide, and now those expectations have shrunk. This Chinese company has a market cap of $35 billion, quite big, so their shares basically lost around $7 billion in value here. It's true that they are targeting a huge market worth billions, and Bor itself only has 100 million market cap. But this huge discount share offering at $0.25 makes me suspicious, to be honest. Next up, Nektar. They have a compound in phase 2 for which they've presented positive data this week. But before we look at the data, let's talk about what's interesting about Nektar. It's a company working with regulatory T cells. These are cells that keep the immune system from becoming too aggressive and help maintain a healthy benefit-risk balance. Basically, they are the ones that prevent an exaggerated immune response. I think they are one of the few companies focused specifically on this type of cell, and it could be a really smart strategy. Back to their phase 2 results in dermatitis, they say they met both primary and secondary endpoints, and they were statistically significant. They plan to present more long-term data in Q1 2026. They shared data on 393 patients showing improvements across all parameters compared to placebo, and with a clear dose-dependent effect, which is excellent. Their safety data are in line with other drugs that aim to suppress the immune system. So, of course, with the result, the stock skyrocketed nearly 300%. So, what can we expect now? What should we keep in mind with this company? Well, here's where digging deep gets interesting. Starting even after this jump, Nektar market cap is only 319 million, despite they had 220 million in cash. That means the market is almost ignoring their research pipeline. And moreover, they still have enough cash to fund operations through Q4 2026. So, what's the deal with this drug? Well, this drug has a backstory with Lilly. Years ago, they signed a collaboration to test this drug for dermatitis, with Lilly handling the bulk of the clinical trial data. At some point, Lilly announced that the results were not statistically significant and pulled out of the partnership with Nektar. In response, Nektar sued Lilly, claiming the data was incorrect and that Lilly was suspicious, favoring another drug they had previously acquired for the same disease. I leave the link to this news story, which explains it really well. The point is, now the phase 2 data trial for this dermatitis drug has turned out positive, just like Nektar has claimed, and the legal process is still ongoing. Nektar alleges that Lilly delayed the commercialization of this product and is suing them for that. We don't know how much they are asking for, but there is a speculation on Twitter that some sort of agreement will likely happen. Anyway, let's look at how the stock behaved when they presented the negative data with Lilly, where it was and where is it now. Look, when they announced the negative result with Lilly, the share price dropped 53% on the first day. But they had here 500 million in cash. You can see here below with the market cap indicator that with the negative data, the market cap dropped to around 363 millions. About the same level as now, when they are sitting at 319 million of market cap. So basically, with better data for a drug now in phase 2, the company is valued lower than when things look like a total disaster. Of course, it's true that they now have 300 million less in cash, which obviously impacts the share price, but the scientific data is better than them. And there is one thing that we have to keep in mind if you are wondering what Nektar stock might do in the next few days. As this ex-use points out, they are going to be removed from the Russell 2000 index, which means about 5% of their shares could be forced to sell. I'm not sure if that has already happened or will happen in the coming days, but it's worth watching because index entries and exits can be very important. So, there you have it, everything about Nektar, the good and the bad things. Who else brings this data to you on YouTube channel? Only this taxi. Now it's up to you to make your own decisions. We don't have a crystal ball here. What do you think? What position would you take in Nektar? Drop your thoughts in the comments below and let's have a good discussion about where it could go. Now let's move on to the next one, Eyenovia. This stock shot up 400% this week. Was it because of some revolutionary clinical trial or a new therapy that cures every disease? Nope, this is Biotech, you know. Surprise everywhere, Eyenovia jumped because they invested 50 millions of their corporate treasure in cryptocurrency and changed the company's name to something related to decentralized finance. They also announced that they are looking to sell their iDevice division to another company. Look, there are plenty of companies lately putting capital into Bitcoin and holding it as a reserve. But somehow we've had the bad luck in biotech that there are already 2 cases of companies diving into shitcoins. alternative coins that have nothing to do with bitcoins and are basically garbage. Eyenovia stock skyrocket. Maybe investors see more future in crypto than in biotech? This user on X even point out that Eyenovia's share price has jumped more than other companies with strong scientific data. Honestly, the path is clear. You don't need to reinvent the wheel. If they want to go into crypto, they should do it to help save science with that what really holds value. And in that case, there is no second best. I even have a video about how Bitcoin can help to cure diseases. Link up here. And last one, finally, Cidara, which doesn't have a very broad pipeline, but this week announced positive data for its antibody that helps prevent the symptoms of the flu virus. These are really strong results, and to put it into context, flu vaccines have to be reformulated every year because the virus keeps changing. However, with Cidara's technology, in theory, this antibody could work for any flu strain, which is great because it wouldn't need to be updated every year. The prevention rates for symptomatic flu are very good, and remember, flu vaccines are not 100% effective either. In fact, they are less effective than the highest dose of this antibody. On the other hand, producing antibodies is much more expensive than making vaccines. So even though it's a great product, if it does get approved, it will likely be used by high-risk groups, people who are immunocompromised, or even those who really don't want to get a vaccine and prefer an antibody instead. So it's not going to replace flu vaccines. Both treatments would coexist if Cidara's antibody is approved. And even though Cidara's had enough cash for at least another year and a half, what did they announce the next day? Correct, a stock offering. But it doesn't seem too aggressive. 8 million shares compared to the 32 million they already have, and at price that is in line with the share price after announcing the good data. Around $44 for this stock offering, and now they are trading at $49 after a jump of 145%. Even after announcing the stock offering, the share price has kept climbing. Cidara now has a market cap of around 1 billion, not small at all, and this drug still has to go through phase 3. It's not exactly right around the corner, of course, but after these excellent results, it's definitely more viable to get this product in the market. So, do your own math. The company is worth 1 billion. The flu vaccine market is about 10 billion today and is projected to double over the next 9 years. You already know that Cidara's antibody won't be for everyone because of its higher cost, so estimate what percentage of that total market Cidara could realistically capture. Apply the right multiple and you'll get an idea of where this stock could trade in the medium term. And that's all for today. We wrap up with the key takeaways from all this video where we've been reviewing the best performers of the week. You know how it is, there are always surprises in biotech. Good phase 2 data is the key to big re-evaluations. And the last one, here's another clue that's happened again. The announcement of upcoming data right before releasing it. Exactly what Nektar did a day before reporting its strong results. And that's the end of today's journey, where we've seen dying companies come back to life and take very different paths. See you next time, goodbye!